some new information on Friday, cattle on feed report, and this gave us confirmed what we kind of expected. 10 of the past 11 months we've had higher placements. So we know we've got a smaller herd size, smallest in years and years, but yet we're placing so many cattle. So this is kind of no big surprise here. 4.1% increase in placements. So this means that we still have a buildup in cattle on feed. So I'm going to take a look at the blue bars here in the space compared to last year. It continues to grow, and right now we have a full numbers right now. I believe 5.6% more cattle on feed than last year at this time. So we certainly should expect slaughter levels to remain very large, anywhere from 4 to 6% higher than last year from now through the month of, in fact, now through July. So we have this large feedlot population which we are going to be feeding off and taking care of in the next 4 to 6 months. However, the big news, which the market is all still watching and moving on right now, is the fact because we've placed so many cattle, we have such a large shortfall in available cattle to place from here on out. Placements from March through October, they're going to run a full 6% lower than last year at this time. So with that in mind, we're going to have a very bullish situation laid out pretty much from October on through 2012. So this is a bearish supply report for the next 6 months, very bullish for the back end of this year. So for cattle, that's a situation we've kind of known about for some time. On the short-term type of supply fundamentals, so we hit 110 cash cattle last week, which is shown by this red line here. This is, of course, a record as far as numbers we're looking at here, and this is cash cattle on the right-hand scale, and this goes with the red line here. What's interesting about last week, though, is wholesale beef actually closed lower. So packers reached out, they bought cattle for $3 higher, and yet beef actually closed lower for the week. In fact, beef packers are now actually running negative packing margins based on these numbers. So it's one of those deals where perhaps last week's big $3 jump could be one of those type of rational tops that they would make, or a sign of a top. That's a good possibility. I'm not convinced of it here just yet, but it's certainly something which we all got to watch very closely. As far as the recommendations and things like that, we still talked about this on the report. We're still strongly advised to have 50% of live cattle or expected marketings locked up already, and this is for marketings in the second quarter. So April, May, and June marketings. We're still looking at a 105 is what our price projections say for that second quarter, and you're still looking at 112 or so for the June contract. So still looks like some very good opportunities work on these sales. And as far as what exactly are we doing, we're doing a three-way on the cattle, and the one we did just a couple weeks ago was selling up to, I believe it was a 111 put, and we've sold a 118 call. So we're very happy with that trade, with that hedge, and that still gives us plenty of upside from current prices. So that was buying a 111 put. In fact, you can in fact do a little better job than we did right now. That was a 118 call. And I believe the put down below that we sold was about a 104 or so. So as far as this goes, we're still 50% hedged, and if we get confirmation of some more weakness in the cattle, we'd be happy to lock up the remainder of that second quarter. On the hog side, the main thing we're watching right now this afternoon at 2 o'clock, we've got the cold storage report. In terms of numbers, we're going to have stocks just a little higher than last year, which is what this red triangle shows, and this is not going to be a big surprise at this point. We haven't got the last few weeks of crude exports included in this number yet. So we should start to see the stock number drop below last year, and that'll be starting the next couple weeks report. So overall for cattle, we still think that prices are overvalued. As far as hogs, we're still looking at corn as being a big driver, and obviously a little bit lower here today. We're not ready to work on some sales.